Hi everyone, welcome back to Saheb Academy. Today we are going to talk about purchase book in a bit more detail, and we are also going to see one conceptual example to understand how to record in the purchase book and do the posting of it into the ledger accounts. Because if you only understand the recording of the purchase book, then you will not have entire clarity. So that's why we'll see the recording into the purchase book as well as the posting of it into the ledger accounts. Is that okay? Right. Now, before watching this video, please make sure you have watched the previous video of subsidiary books, because in the previous video I have introduced the subsidiary books to you. I have told you that subsidiary books is what? It's a part of a journal. It's just a breakup of the journal. The journal cannot be a single book. It is many number of books. What number of books? See here, types of subsidiary books. This also we have discussed. Cash book, purchase book, sales return book, purchase return book, bills receivable book, bills payable book, and journal proper. Okay, so please make sure you have watched the previous video and then you're watching the second video. So now let's come back and let's start the second video. Now see, purchase book is very easy to prepare, because in purchase book what do we take? We take only credit purchases of inventory. That's all. Now understand this properly. What's inventory? Inventory is the item that is meant for resale. For example, if you're talking about a car showroom, then what is their inventory? Cars, right? So car is their inventory. If they are purchasing the cars to sell them later, they are purchasing the cars on credit, then only it will be recorded in the purchase book. Now for example, the car showroom, that business has purchased furniture. So is that furniture for resale? No, of course not. It's for use in the business, so it will not come in the purchase book. That furniture is what? Credit purchase of asset, not for resale. So that's why it will not be recorded in the purchase book. If we are talking about a furniture shop and let's say they have purchased the furniture on credit to sell it later, then it will come in purchase book, because furniture for furniture shop is inventory. Is that clear to you? So what will come in purchase book? What sort of transaction will come in purchase book? Credit purchases of inventory, the item that is meant for resale. And what will not be recorded in the purchase book? All the cash purchases will not be recorded. Okay, any cash purchases, whether it's inventory or asset, it will not be recorded, because that will go to cash book. And credit purchase of asset not for resale, that will also not come in the purchase book. For example, car showroom has purchased furniture on credit, it will not come in purchase book, because that's not inventory, that's an asset which will be used in the car showroom, that business. Is that clear? Yes, definitely it's clear. Now one more thing that you have to understand regarding purchase book is that purchase book is not equal to purchase account. This ledger account and this purchase book is entirely different. Purchase book is part of what? Journal, and this is ledger account. So the concept of these two things is entirely different. Okay, purchase book is not equal to purchase account. These are two different things. Is that clear? Yes. And then there's one more thing that you should know about purchase book is that there is no fixed format of purchase book, and also the sales book. Different sorts of businesses may follow different format as per their convenience. Because see, you have different sorts of businesses, you have hospitals, car garages, so many different sorts of businesses. The way their operations are conducted, how they purchase, in what way they purchase, and in sales books also, the way they sell the services or the products is different. So that's why what will happen is the format is not fixed. The businesses will have their own format as per their convenience. So here I have provided you this simple basic format, but this is not the format that is followed in the real life. In canteens, in hotels and all, you will see different sorts of formats are there. They will have more columns. 5 to 6 columns also can be there. Okay, but this is just a basic format I have provided you so that you can understand. So what is this format? See here, it's very simple. Date of the transaction, particulars. In particulars, what you will take? The name of the supplier from whom you have purchased on credit, and below that you will write what you have purchased. For example, Verma Brothers, and then you'll underline that, and below that you will write what you have purchased from Verma Brothers. Okay, and then the bill number, invoice number, and here you have ledger folio and the amount. What's the ledger folio? It's just the page number of the ledger book. Yes, you know that. So this is just a basic format, right? But in the books also you will find different formats are there. It's totally fine. The formats are not fixed. Okay, because see, it's very simple. Why subsidiary books were introduced in accounting? To make the journal more simplified, more structured, and less errors will happen, and it will be easy to trace and rectify the errors for accountants, right? So this was the objective of introducing the subsidiary books in the accounting. So if you make the format fixed, stringent, fixed format, then it will not be convenient for the businesses. It will not be a sound accounting. Yeah, so that's why if you have fixed format, then it kills the objective of subsidiary books. All the advantages of subsidiary books will be killed. Okay, so that's what. There is no fixed format of purchase book. Fine. So just read this. See here. Special journal. What's purchase book? Special journal maintained to record transaction relating to purchase of goods on credit. Yeah, is called purchase book. Fine. The entries in the purchase book are made on the basis of purchase invoices received from suppliers. So understand, see, you have ordered something from your supplier on credit, so you have received those goods. Okay, receive those goods, and along with that purchase invoice, the supplier invoice is also there. So on the basis of that invoice, inward invoice we also call it, because that invoice has been generated by the supplier and it's coming into our business, so it's called as inward invoice. Purchase invoice or inward invoice, it's coming inward, inside our business. So inward invoice. Is that clear? Is it absolutely clear to you? So invoice number is what? This is the purchase invoice. This is very important for you to understand. Okay, fine. And then now we have to understand posting of the purchase book. Now we will not understand this directly. We have to take an example to understand the posting of purchase book. How we will record in a purchase book and do the posting of that into the ledger accounts. There are two things involved. See here. The first thing is posting of an individual amount. The individual amount from each supplier will go to their supplier account. Okay, that what will happen. See here, posted to the credit of suppliers account. Buy purchases will go in suppliers account. Buy purchases, like that it will go. And then what will happen? The second thing is double entry effect should be there, right? Here only the supplier account effect has gone. The purchase account effect also should be recorded, right? So that's what will happen over here. See, posting of periodic total. We will set a time period, a week, 15 days, 1 month. We'll set a time period. After that time period, we'll make the total of the purchase book, and whatever total is there, that total will be taken to the purchase account. Okay, posted to the debit of purchase account. If this is a purchase account, ledger account, then here it will come to sundries as per purchase book. Now let's just see this practically in that conceptual example. Now here we have this conceptual example. With this, let's try to understand how to do recording of the transaction in the purchase book and do the posting of this purchase book into the ledger accounts. You have to properly understand how the effect of this purchase book will go to the ledger accounts. Okay, fine. So see, let's say we have made credit purchases of inventory, item that is meant for resale from these people. Vishnu, 2 lakh worth of inventory. Shivraj, 50,000 worth of inventory. Danish, 60,000 worth of inventory. Safa, 1 lakh worth of inventory. Zikra, 40,000 worth of inventory. Okay, fine. And in total we have made 4,50,000 credit purchases of inventory. Now how it will be recorded in purchase book? As you can see clearly over here, it's very simple. Date of transaction. In particulars column, you will take the name of the supplier, the person from whom you have purchased on credit the inventory, and what you have purchased. That detail should also be there over here, which I have not taken because I'm not focusing on the date of transaction, the exact detail, invoice number and all these things, because I want to properly explain you the logic and the mechanism behind this purchase book, how the effect will go into the ledger account. That's what I'm focusing on right now. Okay, we will solve the big problem, you will see the detail properly. Okay, so how will you take it? Vishnu account 2 lakh, Shivraj account 50,000. The detail will be there. Okay, below the Vishnu, the detail what you have purchased from Vishnu, it will be written over there. Okay, so that's how you take it. Vishnu, Shivraj, Danish, Safa, Zikra, and the amounts, right? Now you have to understand what is happening in the purchase book. See, what does this mean? Vishnu 2 lakh. We have purchased from Vishnu 2 lakh worth of goods. So purchase account is getting debited. When you recorded Vishnu 2 lakh, what are the effects? The accounting effects. Understand that. The accounting effect is purchase account is getting debited by 2 lakh. We have made the purchases of 2 lakh, isn't it? So purchase account is getting debited. The second effect is that Vishnu account is getting credited. How is it getting credited? What are you saying? See, we have purchased the goods from Vishnu. Let's say we have got the goods. Have we paid to Vishnu? No, we have not paid to Vishnu. We have promised to pay. This is credit transaction. All the credit transaction of inventory are coming over here, isn't it? So we have promised to pay. So a liability has been created to Vishnu. We have to pay, right? So Vishnu account is getting credited. So this entry you have to understand properly. Purchase account debit to Vishnu account, okay? And with this entry you have to do the posting into the ledger accounts. All right, so whatever the journal entry you learned previously, that is not something that you should ignore or something. See, the same effect is there in the purchase book also. You will understand. See here, let's see how the posting of this will happen in the Vishnu account. Yeah, see here, ledger account. This is the Vishnu ledger account. Who is Vishnu to our business? This is our business books, right? Our business accounting books. So who is Vishnu to us? Vishnu is our supplier. We have to pay to Vishnu because we have purchased goods from him. So Vishnu is our liability. We have to pay to Vishnu. Creditor, payables, right? So it has credit balance. Whenever it has credit balance, that means minus plus. Debit means minus and credit means plus. So Vishnu account is increasing, you know, because we have made the purchases, right? So Vishnu account is increasing. We have to pay. Vishnu account is increasing because we have made the purchases from him on credit. 2 lakh worth of purchases. This is how you will do the posting. Let's go further. Let's go to Shivraj. You'll understand this. See, from Shivraj we have purchased how much? 50,000 worth of goods. So purchase account to Shivraj. Shivraj account is getting credited. Shivraj account is getting credited because we have made purchases. Shivraj account is getting credited, right? It's increasing. Why is it increasing? We have to pay to Shivraj. We have purchased goods from him and we haven't paid anything. So Shivraj account is increasing because of purchases 50,000. Is it clear? Same with the Danish also. Danish account is increasing. Danish account is getting credited because we have made purchases from him 60,000. Yeah, Danish is our liability. Shivraj is our liability. All these people are our liability. We have to pay to these people, right? They all have credit balance. They all are getting credited. Do you understand this? In purchase book, all of these people are getting credited. All of their accounts are getting credited. So Danish account is getting credited because of purchases. Safa account is getting credited because of purchases. How much? 1 lakh. Zikra account is getting, credited because of purchases. Do you understand this? The effect is entirely same. So that's what I said. The thing which we learn in the beginning, it's not like we have to ignore that. No, you understood the mechanism behind this. What was that mechanism? Purchase account to Vishnu, purchase account to Shivraj, purchase account to Danish. Yeah, separate entries we used to pass. Yeah, in the beginning, in the simple basic form of journal. Yeah, but then what we did, we simplified that. You don't need to pass that separate journal entry. Just write purchase book and take the names all together. Vishnu, Shivraj, Danish, Safa, Zikra, or whatever the names are from whom you have purchased the goods on credit. And then after a certain period, whatever the business decide, the periodic total, the sum will be taken to the purchase account to have the complete effect. This individual amount were taken to their supplier's account. This was just the single effect, but we follow double entry system in accounting. Yes, so to complete that double entry effect, what we have to do, we have to take the periodic total to the purchase account. Yes, so what is this 4,50,000? This is the sum of all of this. Yeah, sum of all of this. So all these effects, yeah, the double entry effect will go over here. How it will go? See, 4,50,000. Okay, so what does this 4,50,000 amount signifies? It signifies that we have made this much credit purchases in total in this period. Yes, so that means purchase account is increasing. Purchase account is increasing. Yeah, debit balance, right? So plus minus. These are liability account. This is an expense account. Yeah, later it will be converted into asset account, inventory. The unsold goods will be transferred to where? Inventory account, asset account. But for the time being, for this period, for this accounting period, it will be expense account. Yeah, so purchase account is getting debited because we have made the purchases, right? So it's increasing. So it's increasing because of what? Because we have made the purchases from these people: Vishnu, Shivra, Danish, Safa, Zikra. Yeah, so purchase account is increasing because of these people. Who people? Which people? These people. So what are we gonna call them? If we have the whole, the whole amount together, then we are going to say to amount as per purchase book, or to sundries as per purchase book. Just the collection. Sundries means a lot, a collection, something like that. Yeah. To sundries as per purchase book. If you don't want to write sundries, then just write to amount as per purchase book, 4,50,000. So the double entry effect is completed. Yeah. Here you took the individual amounts and then you took the periodic total. If you want to remember the shortcut of this, you don't want to understand the logic, then what you can do, you can just remember this shortcut. See here, it's very simple. Individual amount. Where does the individual amount will go? Posted to the credit of supplier's account. This is supplier account. Credit side by purchases 60,000. Yeah. Credit of supplier. Credit side of supplier by purchases account. And then in purchase account, this periodic total. What will you do with that? Posting of periodic total, posted to the debit of purchase account. Purchase account is getting debited because we have made so much purchases. Our purchases are increasing. So debit of purchases to sundries as per purchase book, or you can also write to amount as per purchase book, the periodic total 4,50,000, or whatever the periodic total is. Okay, to sundries as per purchase book. Is that clear? So this is how you prepare the purchase book. Easy? Do you understood this? Easy, right? Yeah. So that's it for this video. See you in the next video. Bye.